my name is Ian Khan and welcome to the Ian Khan Show. I want to talk to you about disruption in the accounting industry. There's a lot happening, and if you're an accountant, CPA, CGA, or you serve the financial industry in some way or the other, you probably know that there's something happening within technology that's changing the world of accounting. Now, a couple of years ago, Forbes magazine said that the accounting industry will be disrupted as it has never been for the last 500 years. So accounting as a profession is really, it's been out there for a few years. And, they've found cuneiform tablets that go back thousands of years with different transactions recorded on them. From that time until about 500 years ago, when modern accounting took birth, somebody named Luca Pacioli, from an Italian mathematician, came up with the formulas for modern-day accounting and invented the modern-day ledger. And since then, accounting has not changed. As a profession, it has used the same techniques. It has used the same way of working. Of course, technology has helped. It has accelerated those things. But by far, the method of accounting has remained the same. Now, they say that by the year 2020, a huge disruption will take place, and rightfully so, because a lot of newer companies are focusing on making accounting more efficient, making it better, faster, reducing the time it takes to do accounting as an overall function. So let's look at a few things that are disruptive, that are changing accounting, and what you, as an accounting firm, as a partnership, as an association, as a networking group for accountants, or as an accounting expert, should look at in terms of changing, identifying, and following. One of the biggest technologies of recent times that has made the waves is blockchain technology, and there's a lot of resources available on blockchain. You can go out and study those and research how it works, and the block and hash and all the technical aspects of blockchain can be mastered in no time at all. But what is really of value is, what exactly does blockchain stand for? Why is it so different as a value creator that it does something that was never done before? So for me, honestly, the way I identify with blockchain is that it creates peace of mind. And why does it do that? How does it create peace of mind? It creates peace of mind by taking away the worry of not trusting anything, taking away the thought that is something accurate or not, and the need to check it and recheck it and so on and so forth. Now, here's an example. In the world of accounting, a majority of work that accountants do is checking for facts, is making sure things tally, it's making sure the left side equals to the right side, and that's what accountants do with a microscope. Now, if you saw the recent film called The Accountant, you probably know what accountants do. And if you haven't, it's such an entertaining movie, so watch it. It's called The Accountant. A really different take on my accountant friends right there. But going back to blockchain, accounting as a profession has always relied on making sure that every cent is counted for, every number makes sense, and everything has supreme accountability. Now, blockchain changes that, and it uses technology to ensure that every transaction is accountable, everything that's being captured within this database is accountable, and you can track and trace every aspect of data, every aspect of information in real time, anywhere. Now here, let's talk about some of the examples where blockchain applies, and then I will come back to the idea of accounting and blockchain and how it all works. One of the things with blockchain in recent times has also been the emergence of cryptocurrencies: Ethereum, Bitcoin, Kanye coin, Dogecoin, Ripple. There are so many cryptocurrencies out there that it's confusing at times to think about blockchain and cryptocurrencies, and the fact that these two are two different things. By far, a majority of the world believes that Bitcoin technology is the same as blockchain, and it's two different things. I really believe we all need to open up the internet and research this information because it's very important and very crucial. So Bitcoin technology, cryptocurrencies are built on top of blockchain technology, and that's how those two are connected. And the blockchain is fundamental. It is a pivotal piece of value creation rather than Bitcoin or any cryptocurrency. They say that with blockchain, information cannot be stolen. Information is permanently recorded and it can never be deleted. And those two aspects are very, very important. Information is also distributed within a blockchain environment as compared to a traditional database where you might store information within tables, and all those tables reside within an SQL database or an Oracle database or DBMS database. But within blockchain, there are numerous copies of the same data available in different places. In fact, data is broken down into smaller chunks, and those are distributed. And all of these blocks are updated in real time. They all know what exactly is in the other blocks, and they're all connected to each other through cryptography, through a secret password that connects one block to the other. So if you were to hack into one block, you would not be able to know the contents of the other blocks at all. And that's kind of a safety feature built into blockchain that makes it really, really cool. Now, blockchain applications are in e-commerce, equity markets, land ownership, digital rights, microfinance. Every industry out there can potentially be disrupted by blockchain. It can be impacted by blockchain in a good way, and many use cases are emerging as we go on. If you open the news and you just type in blockchain technology and accounting or blockchain, you'll see there's tons and tons and tons of information that's coming out, right from MIT creating its own cryptocurrency to smart contracts becoming something very significant, and everybody's trying to focus on smart contracts. Saudi Arabia and the UAE are apparently working on a new cryptocurrency at a government level, and they also say that it can improve infrastructure, transparency, banking sector, manufacturing, tracing food through its journey from farm to fork, and all of these things can happen with blockchain. Now, you might think that, why is this technology so revolutionary that it's changing everything? Well, it truly is. It truly is revolutionary. It's unlike anything that technology had ever seen before, so you have to just accept that fact and start learning more about it right now. Within the world of accounting, we'll talk about the disruption that takes place and what we need to understand in order to stay relevant within the world of accounting. Now, if you remember, last year, PwC, which is a global giant in assurance services and accounting and providing these services, they got barred from auditing firms in India for 2 years. They got banned because what they ended up not doing is not spotting a fraud of almost $1.7 billion in one of the companies that it was auditing. It was Satyam Computers they were auditing, and they were unable to spot a fraud of $1.7 billion. Now, I have nothing against PwC. Mistakes happen, and that's where the important question is. Mistakes happen. People make mistakes. Human beings make mistakes. And the cost of this mistake was about $2.2 billion that the shareholders of Satyam Computers paid. Now, that's a tragedy. It really is a tragedy because it could all have been avoided had it been the case where blockchain was used to capture all this information, to do this audit, because they would not have missed a single cent. Now, easier said than done. It's far more complicated than that, but that's just the general idea of how technology can help address some of the challenges that the accounting industry faces today. Traditional accounting has some big challenges of information being stuck in different silos, information being stuck in hundreds of Excel sheets, bank statements, printed statements, and putting them all together when it's time to do an audit, when it's time to do taxation, assurances. You just have to work with a lot of paperwork, and this paperwork is not in a format where the information within the paperwork can be exchanged between different softwares, between different systems, but they might exist as PDFs, but it's a different thing. Digitization of information is one thing, and capturing information from documents is another thing. And so these challenges make the accounting industry slow. They make it cumbersome. They waste. These things waste a lot of time for accountants in doing things that are frustrating and cost time, money, and effort. The accounting industry reports that about 27% of information that's entered into their systems is inaccurate. So 27.5% information is inaccurate. And Accounting Web talks about a survey the industry did, and they found out there's a huge amount of inaccuracy that potentially goes into accounting records. In 2013, $7 billion was the cost of misinformation, of incorrectly reporting business income and employment values in the U.S., and $7 billion was the amount of fines that different companies were slapped with by the IRS in America, and that's a big cost. Data insecurity is a big challenge with wrong information shared, personal information shared with people that it shouldn't have been shared with, customer information leaked where it shouldn't have been leaked, employees sharing corporate information with friends or family, uploading information to cloud applications that are not secure and safe. These are all challenges that the accounting industry faces, and a source of pain and risk to all the companies that operate within this domain. Now, when you talk about blockchain, you also need to understand the impact it has on other industries, and how is it changing the world around us, and how it could start penetrating the world of accounting, as an example. There are so many use cases of blockchain. These are cases where blockchain has been implemented. It has created some tremendous value. It has done things that were unable to be done in the past. There's examples such as Glacier 51 toothfish, which is a very rare and prized fish that's farmed in around the South Pole, and it takes about a journey of 10-15 days for fishermen to go and get that fish, and then and to sell it into markets. Now, because of the amount of fraud that takes place in the world, and people faking food, as an example, there's challenges in ensuring that the actual fish goes from the farm to the plate of connoisseurs who want to eat it. In Australia alone, about $2 billion worth of beef is fraudulent beef, and beef around the world is sold as Australian beef, but it's not Australian beef, and that's about a $2 billion industry. So there's a solution that takes care of that. There's a blockchain-based company that's making sure that the origin of beef is captured, and it tracks the entire supply chain of beef. In case of Glacier 51 toothfish, it's the same thing. A company has come up with a solution that tracks this fish from its origin to the plate, ensuring that quality is maintained. These are the real goods that you're paying for, and it's something fake. Within the music industry, we've got some great examples. One of them that I can think of is something called My Celia Passport by an artist engineer, Imogen Heap. She's a Grammy Award winner. She's also in my documentary film, Blockchain City. She wants to eliminate the challenge where musicians are not paid for what they are due, because there's a huge inefficiency in the industry where sometimes as much as 50% of payments do not make it to content creators. On top of that, you have piracy and other issues that really affect how music is created. In the insurance fraud industry, it's a $40 billion industry, and it costs the industry $40 billion every year because of insurance fraud. And people are frauding insurance companies by creating fake claims. People's lives are being lost because of this. There was a recent example in the UK where 3 people, they wanted to encash an insurance policy of £300,000 for a bakery operation they had in place, and they ended up setting fire to it, lighting up on fire, and as a result of that fire, 5 people were killed. And can you believe it? That's the cost of of insurance fraud in some cases, and this is a terrible, terrible crime that can be avoided when we have traceability, tracking capabilities of insurance claims, past histories, and everything is on just one data chain, the blockchain, and everything can be viewed back in time since things started. And that's one of the things blockchain offers. There's other cases within real estate and law firms. Check out my previous episode of this show and you'll see an example of real estate and how law firms can get affected by blockchain. The reality is that within the world of finance, money, banks are making a big take on blockchain. They're buying blockchain startups. They're buying up and acquiring smaller companies that have solutions that do something very unique. So it's a space that you should watch out for, because there's a lot of movement in this space, and you've got to watch out for what's coming your way. I want to talk to you about the Big Four real quick and talk about Deloitte, EY, PwC, and talk about what exactly are they doing with blockchain and how does it make a difference. Now, let's talk about Deloitte. Deloitte is already working on blockchain products. They have a few prototypes out. They have 3 blockchain labs across the world, apparently. They're also a member of Ethereum Enterprise Alliance, which is a group that focuses on Ethereum technologies, and the Hyperledger project, which is a type of blockchain project. And so they're already casting their bets on blockchain because they know this is the future. PwC has invested in something called VeChain. It's a product company, a blockchain product company out of China. They're also apparently working with Alibaba in the food industry and multiple stakeholders within the food industry to ensure tracking of food sources, what is the journey of certain things, and how have they reached the stores, and how will they reach the plate. There's a lot going on within that space. E&Y, they were actually the first company to accept, first accounting group to accept Bitcoin as a form of payment in their Swiss offices. And they have 3 blockchain labs across the world, and they're working on products and solutions for other people and helping them adopt to blockchain. Last but not least, KPMG, they have something called a digital ledger services that helps companies address blockchain challenges. And they're also working on a few different things within blockchain. They've recently come up with 2019 predictions where they say that blockchain will converge with the Internet of Things. Tokenization of assets will drive loyalty. Blockchain adoption will spike across different sectors. So they're actively now commenting on blockchain, and it's a big part of their practice. Some of the technologies that changing the landscape for accounting firms are not just blockchain, but they're also based on artificial intelligence. Companies such as Xero, YayPay, AppZero, AgileZ, Crunch, they're all names of some startups, software companies that are doing accounting in a different way, whether it's automating the collection of information, it's keeping track of bookkeeping, it's fraud detection, expenses, compliance, IRS rule implementation, online accounting. There's so many different things these newer softwares are doing that they're really eliminating the need for newer customers or companies to go to a traditional accountant and say, hey, can you help me with this? Because now they have multiple options. Now, with the newer generations in the workforce, the newer generations taking over family businesses as well, and the fact that they're really good with technology, you've got to think that, are they really going to go the route that their fathers and parents have gone through and go through the practices of traditional accounting? Maybe they won't. Maybe they'll end up using online platforms and apps to do all their accounting. So that's a space to watch out for. And for accounting firms, I really suggest that you look into a technology side of business. You start investing your time and energy into learning about blockchain, artificial intelligence, and how that is changing traditional accounting. How does your firm fit into that, and what can you do to change the paradigm, to keep your business working, to keep your practice functioning, and keep the doors of your practice open for years and years to come. The rule of accountants is also changing because of the fact that if a majority of these starting level, bottom level tasks are automated, what will accountants end up doing? I see a huge play for accountants when it comes to smart contracts and helping work with smart contracts, building smart contracts, auditing smart contracts, and that's something that you as an accounting firm should pay close attention to, is what can your role be in auditing blockchain smart contracts, and how can you be part of that? But in order to do that, you have to get started. You've got to focus on technology every day, every week, every month. You've got to bring your people together and initiate a set of changes that will propel you into the future. As an accounting firm, as an accounting service provider, pay more attention to blockchain, artificial intelligence, the convergence of these, smart contracts, cryptocurrencies, and how it's changing your industry and other industries around you, because the change that is outside the walls will eventually come in, and you will have to work with customers who are already on blockchain. Share this video and subscribe to my channel to get insight on technology and how it can be used to change the world that we live in and to create a tremendous amount of value.